How's everyone doing today? My name is Frank Bunn, and the title of this discussion is Fibs, It's a Lie. I get so many questions about Fibonacci retracement, and so we're going to talk about that and also how it relates to this idea, this concept of first learning how to trade and then applying the strategy. And it's something that, well, nobody talks about in this industry. Okay, so we'll clear that up by the end of this discussion. So the first thing that we want to do is, well, define what are the fibs in case you don't know what they are. So we're talking about the fibs are Fibonacci retracement levels. And that's basically just a really fancy term for support and resistance. Okay, so what do these look like? Well, they're derivatives of the Fibonacci sequence itself, as you know, which is 1, 2, 3, 5, 8, 13, etc. Okay, so when it comes down to it, basically, without spending a lot of time doing the math, but we're going to take a look at again, an XY axis of price here. Okay, and then the levels themselves are going to be percentages of that move in price. So we're going to do the first level here. So once price, and this is the derivatives, it comes from the high to the low. So a 23, I believe it's 23.6% retracement, and then the next one is 38.2, and then for some reason there's someone has one at 50, which is not even a fib, and then the last one is 78.6. Okay, so what happens is these prices will then, okay, so price makes this move, and then the percentages on these retracements to these levels, people are told, well, this is where you buy, and price will hit this and then bounce. Okay, so depending on where. Now, the first thing that's raised, and what no one ever talks about when you listen to this, it's just this absolute technical analysis bullshit is, well, first of all, which one do you pick? Or there's 4 of them. You know, you can see that it's going to be very difficult to model this and almost impossible to control risk. Okay, so let's take a look at the issue, though, with what goes on here. Okay, so here's the problem, and it's huge. If you do not understand the price action and what's going on as price retraces to these levels, this can be one of 2 things. It could be a continuation of the trend, or it can be a trend change. Okay, so if you cannot read the price there, if you don't know what's going on, you're catching the falling knife. And this can be done at every level. Okay, and so the reason that I know this is because the guy that taught me how to trade was a retired floor trader at the Merc. And so what would happen is these were so common. What the guys on the floor would do is they would what's called fade retail order flow, meaning as the retail customers would buy at these levels, everybody in the know was shorting it, was selling it. And then price would continue. Retail would get stung. More retail traders would buy here. They would trade against it. And because the more informed money understands what price is actually doing, and also has a clue being at the exchanges. But we're talking about screen trading here. But anyway, unless you know what that price action is, so here, and that's the problem, and nobody knows this, or very few people do. Okay, so what happens is if price comes down to a level and it is a trend change, then you're going to have to look for what's called a qualified institutional reversal. Okay, a qualified IR, meaning that then you can tell that the institutions are buying there. This can be found in the footprint of price. And that's what I teach people how to do, and that's what I do every day. Okay, so now if you do not get that, then you're going to have to wait. You're going to have to wait for price to turn, develop a reversal, and then here you'll take what's called a qualified continuation. Okay. If this sounds a lot more tricky and a lot more tactical than just simply buying like you're told when it hits these levels, you're absolutely right. And that's what you need to know. So it's the price action and the institutional footprints at these key levels that determine whether or not the line is valid. It is not because the line is valid because of the Fibonacci sequence. It's price behavior at these levels that will turn price. Okay? If they're going to fade order flow, and the people that don't know that, price is going to cut through these levels like a knife through hot butter. All right. That's exactly how that works. So to recap, what we're trying to do here, and there's nothing wrong. There isn't anything wrong with doing the fibs. You have to do them the right way, though. Okay, so if we're looking at these levels again, so the problem here then is you have to look at the fibs. Okay, our strategy. All right. Now, we've been talking about this enough, and you've probably seen some of my other videos, but strategy is not knowing how to trade. Just because, okay, I got this strategy, now I've got my levels. Man, you're going to have a really short career trading the screen. Okay, so, but what goes on here in this specific price action and reading these qualified institutional footprints, this is knowing how to trade. So that is how to trade, how to second guess order flow and the big institutions at these key levels. Okay, so we got knowledge and strategy. Okay, that's the key. You first build the knowledge. Okay, once you have that and you know how to do that, then you apply your strategy, whatever that is. In this case, it's fibs. But I'm here to tell you, fibs without knowledge, without understanding this, is like picking up pennies in front of a steamroller. And, man, just very, very few, I know very, very few traders who ever got consistent trading fibs without more knowledge. So that's my effort to debunk the fibs, why everybody talks about this, but nobody can really ever make it work. And if you want to do it, first learn how to trade and then apply the strategy. So that does it for today. If you want to learn more about how to actually do this and how to get this knowledge so that you can apply whatever strategy you like, you might be interested in my free training, and there will be a link to that in the description below this video. And I hope everybody has a great day. Talk to you later.